Back again with the FUCTA unique. Today, gold, the world's oldest safe haven asset, is once again at the center of global attention. As of recent market data, gold prices are hovering around $4,700 to $4,800 per ounce, after experiencing noticeable volatility in the past few weeks. But here's the surprising part. Despite global conflicts and uncertainty, gold is not moving in a straight line upward. Instead, it's fluctuating, rising sharply one week, then falling the next. So, what's really happening? In the short term, gold prices are being heavily influenced by three major forces. First, the strength of the US dollar. When the dollar rises, gold becomes more expensive for other countries, reducing demand. Second, interest rates. Higher rates make gold less attractive because it doesn't generate income like bonds or savings. Enter geopolitical tension. Conflicts like those in the Middle East can suddenly push investors toward gold as a safe haven. This explains why gold recently dropped, even during global conflict, because strong interest rate expectations and a rising dollar outweighed fear-driven demand. But now, let's zoom out. In the long term, the story of gold looks very different. Major financial institutions like JPMorgan and UBS predict that gold could reach $5,000 to over $6,000 per ounce by the end of 2026. Why? Because central banks around the world are continuously buying gold, building reserves to protect against currency instability. At the same time, global uncertainty ranging from inflation fears to potential economic slowdowns, reinforcing gold's role as a long-term store of value. In fact, over the past year alone, gold prices have risen nearly 47%, even after recent corrections. So, what does this mean? In the short term, gold is volatile, reacting quickly to interest rates, currency movements, and global news. But in the long term, gold remains one of the most trusted assets in the world, quietly climbing, driven by fear, stability, and global demand. Because in the end, gold doesn't just reflect the market, it reflects how the world feels about the future.